into it. So as that thing lights up, as always, if you have questions, use the chat function, and I'll do my best to get questions answered and get responded to. I don't think we'll be here the full 20 minutes because there's just not a ton of new information out there that we don't already know. So let's start with a quick review of what's coming up. So on Friday, we get the June WASDE report, which is where the USDA is going to show us what they expect the carryout to be, using for the first time the new acreage numbers. And the acreage number is now 92 million acres of corn. And that's a significant reduction from what it was, right? And so the number that matters are these numbers right here, which is what the end carryout is. And I keep harping on this week after week because, frankly, nothing else is really relevant. If these numbers move, the price is going to move. If they don't move, then the price won't move with it. And if you remember, what we were talking about 2 weeks ago was a carryout much larger than this. So this was our carryout. 3.3 billion bushels was our carryout forecasted into July. And our bullish case only dropped to about 2.7, and our bearish case went above 4. So a lot has changed, and that's why we're starting to see a little bit more volatility come into this corn market. So if you hold acres the same and increase yield and hit demand just a little bit, just in case, right? Maybe ethanol's off a little, maybe we didn't export as much. Maybe the USDA is a little lofty on some of its price targets. So maybe our demand situation is not as good as people might have thought. So that would raise our carryout. So now we're kind of looking at a carryout number in this 3.3 billion range, which is what the median was before. But on the bullish side, and if you're looking at the weather, this is becoming a significant amount of debate. If we start to lower the yield and we drop 10 bushel an acre off of what we did last year, and then this is a real interesting issue here, because as of June 16th, when the crop report came, or when the planting report came out, there was 2.5 million acres of corn that wasn't planted yet. And I don't know where that was, but there's a chance that a significant portion of that went into preventive plant. And if that's the case, then this number could actually lower. So let's just pretend that none of those acres got planted and we lose acreage. Now all of a sudden our carryout is down to this 1.5 level. And that becomes really significant because now we just don't have a whole lot of downside risk if that's going to be the carryout. And more importantly, that sets up a very interesting 2021 as we get into the planting season, because now corn needs acres and we may get into a bidding war. So I know I'm rooting for more heat and more dry. I don't wish anybody ill on their crop, but we really need the top end of this crop to fall off and become a little bit more manageable crop size, right? There's a big difference between a 14 billion bushel crop and a 15 billion bushel crop. So hopefully we can get to that, get somewhere kind of between these two and have a carryout that's much more reasonable. Now beans have kind of the same setup. They have a really significant range, and they always have. But if China comes in and performs phase 1, and if we lose a little bit of yield off of this thing, then beans have significant upside potential. They really have a lot that could happen. Now on the bearish side, nobody wants to talk about this very much, but the reality is China's hog herd is half of what it was. And so the demand that they used to have just isn't the same as what it is today. And you have to remember that South America has the ability to plant an awful lot of soybeans if prices were to rally. So the US balance sheet might start to look pretty nice, but if this starts to rally prices, then supply in other places is going to catch back up, right? So beans, that can really limit what a rally in beans could do. And the flip side is also true. If we don't perform and we beat yield, then our carryout is back to being overwhelmingly burdensome, which would be lower prices. So if this close to 800 million bushel carryout begins to manifest, then I would expect beans to be significantly lower than where they are today. And so we might be in a pretty good spot. So I don't have a great feel for where beans are or what they'll do. So let's look at the charts and see what they tell us. Let's start with soybeans. Soybeans had this big, nice move off of the crop report last Wednesday, right? And um, a little bit of follow through, and then a nice gap up on Monday morning. I'll zoom in on this so you guys can see it just a little bit better. So now there's lots of talk. Is this the top, or is this some sort of a significant peak? Well, usually when we see a peak, we look for certain things, right? And one of them would be a reversal where we take out the prior day's high, we reverse, and we end lower. That did not happen here, although it got close. But that's one of those, it either did or it didn't kind of things, and it didn't. So we don't have any traditional reversal patterns, with the exception of, yes, so far today we've taken out the prior day's low, which isn't all that helpful. So beans have quite a bit of work to do here to find out if this is going to generate some buying or if a larger reversal is taking place. And we want to look at this level right here. You know, think of this as a shelf. If prices are able to hold above here, then this support should allow us to work on higher. If they can't hold, then we're in jeopardy of coming all the way back to the 850 level. And if this level right here breaks, that is really bearish and not a good situation in any way, shape, or form. So beans have a lot of work to do, and unfortunately, they have a lot of room to do it in. So pretty much anything from 912 to 850 is neutral at this point in soybeans, and we're waiting on them to establish the next direction. So if a producer wanted to raise his floor and get some $9 puts and defend this level, no one's going to second guess that. The 880s aren't too expensive. They're about 20 cents. That would be a good level. We had owned a lot of 840 puts. Moving those up would cost about 14, 15 cents and would probably be pretty prudent. Otherwise, we want to leave our upside open because we don't want to erase the possibility that this could go higher. So it's that delicate balance between leaving your upside open, but also managing your financial risk by reducing it with put ownership. So sounds like a broken record, but this is the time of year where we really need to be thinking about that. And 884, 855, those are your two major levels to be thinking about and watching. Anything above that is gravy. All right, let's look at corn. Remember the shelf that we just talked about in beans. Here's your shelf in corn, right? We're sitting right at 347. Lots of traders yesterday were talking about buying a move down to 347. You've got this level right in here that provided a lot of support and resistance, and it's over here. So it's very, very strong support at this point. And this morning we bounced right off of it. So we survived the first test. Anything above, I'm going to say 338 is probably okay to trade in. There's not technically anything above here would be more bullish than bearish, but I don't like this at all. We rallied right to the 38% retracement mark. We hit it twice and we failed. So this is either a pullback to gain some strength to challenge it again, or we're done. And that's all she wrote. My bias is that this is support and we're going to make another run higher and probably at least challenge, if not take these highs out. But that's more like a 60-40 thing. That's not, I don't have a tremendous amount of strong conviction that that's what's going to happen. But certainly, as of this very instant, the market has held that level of support and looks to be trying to post a little bit of a reversal. So we'll see what traders do with that. From a marketing standpoint, if your basis levels are strong enough and you're comfortable that the basis is good, there's no problem here pricing some cash bushels. The risk is real. The risk is relevant. Remember, if we have a 2.5 to 3 billion bushel corn carryout, we don't have a lot of upside. The downside, though, is very much open if we're going to trade into that 3 billion plus mark, and we can take out this low very quickly at 322 and challenge $3. So I don't want to say that we're out of the woods yet, because the weather is tough, it's dry, it's hot, and it could accelerate a move higher, but it can also change quickly. And if the crop doesn't shrink, then the bias would be that we fall closer back into this range down here. So owning puts at this level, defending 340, 350 would be a very prudent move to make, and or selling some cash bushels into strong basis levels just to make sure your risk is limited. If we're able to rally and take out this 370, 380 level, sell a lot more of it, because the odds of it getting of enough of this crop getting taken away by heat to reduce us enough to get above and challenge this $4 level just are very, very low. It can happen, but it probably won't, I think, is the best way to be thinking about it. So the next rally needs to be sold very heavy, and we need to defend this level here to make sure we don't let it get away from us. So that's about as simple as I can make corn. 347, 338. That's your range. The closer we get to the bottom of it, pick up more and more protection, because if it drops below, you're not going to get the next chance. All right, wheat. Everybody's favorite crop to trade. Wheat has been consolidating and sideways for a long time, but we're not making any new lows, which is a good sign, and the bearish news flow seems to be subsiding just a little bit. Now, wheat is going to be trading closely with corn, in my opinion. If corn breaks and moves lower, I think it's going to be really difficult for wheat to hold this level here. But anything above 332, in my view, is bullish. We've got nice bullish divergences on your lower indicators. You've got 13s. You've got a lot of reversal action that happened down here. So for all practical purposes, 332 should be viewed as a strong level of support, and we should be able to work higher from here, unless corn breaks significantly lower. So pay attention to what corn does. Be watching wheat. If you've got it sitting in the elevator, I'd give it a little bit more time and wouldn't worry about it. If it starts to break below 332, you can always price it and buy calls after it works a little bit lower. So again, I don't really have any strong conviction in any grain at the moment. I think we just got to sit back and let it digest all the weather information and just kind of let it do its thing, but be prudent and manage that downside risk with puts. If you have upside risk, manage it with calls, and otherwise just be patient. All right, that is all I have. I could go through and show you the weather, but I know everyone's watching it like crazy, and I'm not a weather guy anyway, so I'll leave that to the experts. We'll see how it flip-flops and how the trade digests, and we will talk to you next week.